If you are new to investing, you may have heard the term ETF and wondered what it actually means. ETF stands for Exchange Traded Fund. In simple terms, an ETF is an investment fund that is listed and can be bought or sold through a stock exchange, similar to how shares are traded. But instead of buying only one company share, an ETF usually gives you exposure to a basket of shares. Depending on the ETF, that basket could include shares, bonds, commodities, global companies, local companies, or a specific investment theme. For new DIY investors, ETFs can be useful because they may help you build a more diversified portfolio without having to choose every individual investment yourself. But not all ETFs are the same. Before investing, you need to understand what the ETF holds, how it is managed, what it costs, how risky it is, and whether it fits your goals. Before buying any ETF, it helps to ask a few basic questions. First, what does the ETF invest in? Is it focused on South African shares, global shares, bonds, or technology companies? Second, how risky is it? Some ETFs are more conservative, while others invest in markets that can move more sharply. Third, what fees apply? Investors should look at the fund fee, platform costs, and any other charges shown in the fact sheet. Fourth, how long should I hold it? Equity ETFs are usually better suited to investors with a longer time horizon. And finally, how does this ETF fit into my overall portfolio? A single ETF should be considered as part of a broader plan, not as a decision made in isolation. One example of a JSE-listed ETF is the Oribi Global Growth Prescient Actively Managed Exchange Traded Fund. This fund gives South African DIY investors access to a professionally managed global equity strategy through a listed ETF structure. It is designed for investors who want long-term global growth exposure and who are comfortable reviewing fund information. The fund focuses on leading large capitalization companies in developed markets, including regions such as the United States of America, Europe, and Asia. This gives South African investors exposure beyond the local market and into some of the most leading and innovative businesses in the world. The fund's objective is to deliver long-term capital growth and target returns above inflation plus 6%. This is an objective, not a guarantee. Many investors think of ETFs as passive products that simply track an index. An actively managed ETF works differently. Instead of only following a fixed index, investment decisions are guided by an investment manager or investment team. In the case of the Oribi Global Growth ETF, Oribi Capital Partners acts as the investment manager responsible for the strategy. For investors, this means the fund is backed by a defined investment process rather than only following a market index. This may appeal to DIY investors who want professional management while still using a listed ETF structure. Another common question for new investors is, what is the difference between an ETF and a unit trust? Both can give investors access to a professionally managed portfolio. The difference is in how they are traded. An ETF is listed and can usually be bought or sold during trading hours. Its price can move during the day. A unit trust is usually priced once per day and bought through a fund manager, advisor, or investment platform. Neither structure is automatically better. The right option depends on your goals, costs, and risk profile. The most important question is not only, what can I buy, but do I understand what I am buying? Before investing in any ETF, take time to understand it. Start with the official fund fact sheet. For the Oribi Global Growth ETF, note that it is a global equity fund. Its value can rise and fall with international markets. The fund is classified as aggressive, meaning it is more suitable for investors who understand market volatility. Because the fund is newly launched, review the latest fact sheet and avoid making decisions based only on expected returns. The fund is also TFSA approved. For new investors, the process can be simplified into a few steps. First, learn what ETFs are and how they work. Second, compare the ETF to your own investment goals and risk appetite. Third, review the fact sheet, fees, and risks. Think about how the ETF fits into your broader portfolio. Finally, once you are ready, use a registered online investment platform. In South Africa, platforms like EasyEquities allow you to search and buy. Before investing, make sure you are comfortable with the risks and consider speaking to a qualified financial advisor. This video is for information and marketing purposes only and does not constitute financial advice. All investments carry risk, including possible loss of capital. Past performance does not guarantee future results. Please review the official fund documentation and speak to a financial advisor. Oribi Capital Partners is an authorized financial services provider.